Thank you so much. Now, in business news, as the July 2025 Monetary Policy Committee meeting of the Central Bank of Nigeria begins today, analysts anticipate probably hike or retention of monetary policy or tightening, citing signs of macroeconomic instability and easing of inflationary pressures. Well, I spoke earlier to Head of Research at Ankoria Asset Management, Ms. Orolu Odetunde, where she disclosed on our Business Nigeria program. She bared her minds on the expectations for this meeting.
I think it's important to look at the setup to the MPC meeting.
Yeah.
One will be that we do expect, inflation to still continue to face some pressures. And I mean, when they look deeper into the numbers, they would still see on a year-on-year basis, on a month-on-month basis, both food and core indexes are showing signs of, pressure points. Apart from that, we also saw the Purchasing Managers Index for the month of June 2025, which is a leading economic indicator. And I mean, we did see that input prices are accelerating much more faster than output prices. So it means that currently producers are the one absorbing the higher production costs, and along the line they will start to pass on that higher cost of production to consumers in terms of higher goods and services. So we do expect pressure points from that end as well. Another thing we want to look at is the fact that IMF has been advocating that Nigeria keeps a tight monetary policy stance in 2025. We know that majorly inflation in Nigeria is really driven by supply side factors, and monetary policy can majorly cure the demand side factors. But in order to signal to the market, in order to signal to investors that it wants to stabilize prices, it still needs to keep interest rates high. And we know that the Federal Reserve hasn't yet cut any rates yet. We've seen other central banks move in a different direction, but we know that the main central bank hasn't yet delivered any rate cuts, and is due to factors like the tariff uncertainty.